Hey guys, this is Mark Shawson, the Pattern Trader here, and as we head into the last week of August, the trading opportunities are getting increasingly spare, meaning that because this is typically a huge vacation period for Europeans, we don't see a lot of volatility, we don't see a lot of follow through in the market, so I do expect to see a lot of sideways trading action in the markets, in the dollar pairs and other FX pairs, probably for the next couple of weeks. But I do see one emerging opportunity that I wanted to speak to you about today, and this one might surprise you. So for any of you who've known me for any length of time, you've known that I've been speaking about the virtues of being on the long side of the pound versus New Zealand currency pair. Now, the reason that I've been long and buying dips for the past 18 months in the pound versus New Zealand currency pair is because of the governing double bottom pattern that I discovered way back in late October 2016, and then the second low was in January 2017. And with those twin lows at or near the 167 price level, I was predicting to my members that we were going to get a huge move out of that area on the long side. And at about sometime last year, we hit the 202 level. So for every $1,000 you put up, you could have made $35,000 on the long side of the pound New Zealand dollar. But now I'm seeing price patterns, I'm seeing price action emerge that suggest that we're struggling right between the 195 and the 202 level in the pound New Zealand dollar, and that we are in a distribution phase, and eventually this feels like this is going to roll over. So we're presently trading at about 192, and I see pound New Zealand perhaps dropping back down to the 185, 186 area. In the last 8 or 9 months, we've been forming this ascending triangle. Now, the ascending triangle is neither a bull or bear pattern. It just depends on how this market breaks out of this pattern. Since the market is inherently in a long-term downtrend from 5, 6, 7 years ago, it appears that the breakout from this ascending triangle will be to the downside. So last night, to my members, I advised placing a sell stop strategically to catch prices if they start dropping. So right now we're still in the churning phase in the pound New Zealand dollar, and I am seeing a distribution. I'm seeing a bit of a triple top within an ascending wedge triangle pattern here, which to my mind suggests that eventually we're going to break lower in this trading pair. So again, this is, the value I think of this video is twofold. First off, I'm assessing the next move in pound New Zealand. The other thing that I think is instructive is that I have been looking at this pair from one perspective based on a governing pattern that occurred about 18 months ago. But these markets are fluid, they're dynamic, and we need to change our perspective as the market goes forward. And now I believe the next governing pattern is this ascending triangle. It's been kind of trapping us, thinking that we're going higher, but there's been no upward progress below, above the 202 level. And so it's a bit of a trap, and I am incrementally changing my mind. So again, this is what we have to do as traders. We can't get into a fixed mindset. We can't get into a locked way of looking at things. As the market starts changing, we have to adapt, and sometimes that's a very difficult thing to do. So this is a very subtle, instructive video in that I am now detecting changes in a currency pair that I have been for a long time advocating one way of trading, and now it looks like the next major move may be to the other way, namely to the downside. So I hope you got a ton of value out of today's video, and I look forward to speaking to you soon.